So the only thing we look at with dumb money concepts is how does price react to levels? What is a level? I made it very simple. A level is one thing. It's a candle body. That's it. An untested candle body. So if price has not already gone there, that's what every level is. There's nothing else more to it. So we watch the price as it approaches a level. What happens to it? Does it pass it? Does it close beyond it? Or does it fail to close beyond it? That's literally everything I do. You did ask me, how have I changed over the time? Well, I was that guru before where I was living off of course sales, and now I don't sell courses, right? I'm able to do this, right? I show people how to do it for free, right? And that's the true test of, okay, does a strategy actually work?
All right, folks, we got Chris Hunter in the house. We got a bit of a special podcast here for you today. He's not only going to talk about the death of smart money concepts and his new dumb money concepts idea, he's also going to talk about no stop loss trading and what it actually takes to trade like a pro, along with how you can, what is the best way to churn profits from a prop firm. So, Chris, welcome back to the show. It's been probably a couple of years since you were on last.
It has been a couple of years, and unfortunately, I was much more of one of the regular sort of gurus back in the day. And I've been doing a lot of self work and developing my own trading as well, developing my own businesses, and really growing as a better trader overall. And I've really developed something that I'm trying to share with everyone now. Is the dumb money concepts is what I really want to push. And there's something wrong with the industry is the smart money concepts. And I was struggling with it for so long. So that's why I developed this, because it's so much simpler. Like smart money concepts, like you got to be pretty dang smart. It's in the name. You got to be smart money concepts, dumb money concepts. It's so much more simple. There's only one thing you need to know, right? And you follow that. And then from there, you just master your emotions. Once you master your emotions, you're able to trade profitably.
Yeah, and the other thing you're going to touch on today is, I suppose, the biggest problem around trading gurus in the industry, and we'll dive into that as well. So to start off with, why don't we just get a quick background on what you've been up to in the past couple of years? So I know you were a full-time trader back in the day, and you've now moved. You're still trading full-time. Do you want to give us that update?
Yeah, so I was a trader. I started way back in 2013. In crypto, started just kind of like mining crypto on the school computers and then snagging all the free electricity and sending it to my wallet over the weekend sort of thing. A little sneaky off of the school computer labs there, right? And that was all fun and games until, we lost it all. And the start of trading happened in about 2017 with that bull market. And we got into crypto, made some money. Again, lose it all because we don't know what the hell we're doing. And from there, started actually kind of learning how to trade, and I became that stereotypical guru, right? Where I had all these concepts that everyone else also had, right? And I threw like a little spin on it, right, to make it my own, and then repackage it and sell it as this course, right? And the reality is, all of these gurus, man, like they can make money. In theory, but pretty much you're living off of your core sales. Pretty much you're living off signal sales. You're pretty much living off of whatever you're offering as a service. And then trading is just like this bonus cash, right? I don't think any guru actually lives off of their trading income.
Have you had any traders go through the prop firms that you got access to and actually made money consistently?
Sorry, say again?
Have you seen any traders go through? Sorry, have you seen any gurus go through a prop firm challenge and pass it, go on to withdraw, and that kind of thing?
Yeah, no, I mean, not that I'm super aware of. I'm sure people do it, and there's a lot of one-offs, right? Where like you will find somebody that has done it, right? But it's pretty rare that you're going to see somebody do it like 4 months in a row. Right. And that's why I went on live stream and I showed people dumb money concepts. I did one account 4 months in a row. I eventually blew it. Right. But 4 months in a row of trading on the one account, all live stream. And it's not common anymore. And the reality is, what I can say about this now is, you did ask me, how have I changed over the time? Well, I was that guru before where I was living off of course sales, and now I don't sell courses. Right. I'm able to do this. Right. I show people how to do it for free. Right. And that's the true test of, okay, does a strategy actually work? Right. Are they able to actually trade profitably and show you how they can do it? Right. And I don't know of anyone else that does that.
Yeah, it's a very difficult thing, I think, trying to relay somebody's knowledge in the way of a strategy that is mechanical enough for someone to carry out, and then obviously the psychological part on top of that, where you're actually following the strategy and not something that you've just come up with or being lazy and missing out bits and pieces. With this dumb money concepts, which we will get into, and you promised to show us a video on how you actually do it. Yeah. With the dumb money concepts, how easy is that to pass on to somebody in terms of the knowledge that they need to acquire and the execution and that kind of thing?
So with moving out to, I kind of moved to, we were talking about before stream here, I moved to an island in the middle of nowhere in the woods so I could just be at peace and really focus on, my own emotions and thoughts and be mindful of everything. And that was something that really took me from kind of this hit or miss profitability, side income sort of thing to, okay, I could profit pretty much every day sort of thing. And the reality is, you don't need anything really other than a couple little simple things. And then from there, you master your emotions. You master the awareness that you have. Okay, I'm in a loss. I'm in a drawdown. I need to exit this, and I need to be actually proactive in order to take and accept those losses or let things run when they need to. And I know people have talked about this a lot before, but it's really when you're saying psychology or your mindset, what that means is being aware of what you're feeling, right? And then taking data points of your emotions, right? The same way that you would take data points of your trades, you need to be able to write down, okay, what was the emotion I'm feeling at that time? Like, am I feeling anxious? And then is that going to change how I trade, right? And then from there, you're going to be able to actually take a collective amount of data and then say, hey, every time I feel that way, I should be doing this instead, right? And that's going to help you be a better trader, right? Every time I'm in a drawdown, I feel anxious and in emotion, but there's a certain switch where I know that anxiety switches to something different now that I have to get out, right? Rather than just sitting in the uncomfortable.
Hey, start trading Forex indices and commodities with up to 800k of Blue Guardian's capital risk-free. Just pay a small one-time fee to take the challenge, hit a profit target and get funded. Then keep up to 90% of your profits and enjoy fast weekly payouts. Now for futures traders, Blue Guardian Futures offers up to 450k in funding with 100% profit on your first 15k. With low targets, no activation fees and unlimited resets, it's one of the best deals in the industry. Visit blueguardian.com or blueguardianfutures.com to start trading today and grab their limited time discount code.
Basically, then, all the strategy of dumb money concepts is, first of all, and everyone's going to hate this, you're going to get a lot of comments that say, I don't use a stop loss, okay? And what I mean by that is, sure, go ahead and throw a stop loss at like any wacky point if you want as fail safe, just in case. But the reality is you need to know when to get out of a trade based off of what's happening on the chart. And I can show you how to do this. You don't let it hit the stop loss because you're just going to get wicked out and then it's going to go in the same direction. And everyone's felt this pain before. So the only thing we look at with dumb money concepts is how does price react to levels? What is a level? I made it very simple. A level is one thing. It's a candle body. That's it. An untested candle body. So if price has not already gone there, that's what every level is. There's nothing else more to it. So we watch the price as it approaches a level. What happens to it? Does it pass it? Does it close beyond it? Or does it fail to close beyond it? That's literally everything I do at this point. It is the most simple strategy. And then from there, I sit and I watch within and I watch the awareness and the emotions going on.
It's funny. I mean, there's a couple of things there. So yeah, one is I kind of do the same thing, right? But with a lot more added to it, which obviously you've simplified it right down to the bare minimum. And the second thing is, that exiting the trade. In fact, I had to do it this morning, right? So I was going to get wicked out, and I actually did move my stop loss a bit further because I was like, okay, this needs to be a little bit further away. And then I was like, okay, now this trade it's not working out, and I had to accept a 75% of my risk loss. And get out of that trade. And you know what? It's miserable. It is miserable to do that, right? But then the thing is, what I realized many days ago was the more often you do it, you kind of realize at the end of the trading day that, I mean, this actually pays the bills because you're not taking the full loss and you're not taking the full loss plus slippage, whatever that could be. And it all of
Yeah.
a sudden it's like, okay, well, I've just got to keep doing it. And it's that repetition that makes it a little bit easier every single time, but it is miserable when you do it. But it's got,
You trust the system and you trust the emotions, right? You when it's going against you and it's rocketing and it looks like a giant green candle, you know, and you sit there in pain and then it comes back in your direction. Like, wow, I'm glad I didn't have a stop loss, right?
yeah, because
And
sorry, go on.
the reality of it is occasionally you're going to get like a stop exit that's really bad, right? You're going to leave a trade that's maybe twice what you wanted to, but that's only maybe like 1 out of every 10 to 20 times. The rest of the time you're actually going to get out before, because you're going to see it going in the right direction and you're going to accept that loss faster.
Yeah. Yeah. And what about the, you said you eventually blew the account, which I think with this approach where you're churning through prop firms and getting withdrawals and that kind of thing, eventually, you've got to start again. What happens in that scenario? Is it just a news event you can't control or something else?
So I've got two ways, and I'm a prop firm owner too, and a trader. So I've got both perspectives here. So I can see what traders make the most money, and the traders who churn prop firms make the most money. Now, what I recommend for everyone here is don't start churning, right? What I did was I went and I said, hey, I'm going to show you guys on stream 3 months of me trading one account. That's what I promised, okay? And so I risked very little. It took me, I think, a month and a half to pass, right? And then I got funded, and then it was another, I think I got 3 payouts or something, right? And from there, afterwards, I said, okay, that's enough. Now it's time to start churning, because churning is what makes more money. But the reality is, if you can't prove that you're profitable over the course of 3 months, that churning means gambling, and you're going to spend way more money. So what you do is you get one account, you trade it for 3 months, you prove that you can get those 3, 4, 5 payouts in a row. And then you accept, once you've blown that account, which would be some sort of, maybe you're risking too much eventually, or maybe you've decided to start churning now. And that's what I did, is I said, hey guys, I'm going to start churning now that it's January, right? So I did September to the end of the year, and then the end of the year came, January came, I said, I'm going to start churning the account now. So I went full margin, and that's all it is you shift the dynamic of saying, hey, I'm going to trade the account and risk 1% of the account, to I'm trading the prop firm. So I bought a challenge. It's $100, and what I want is a payout. So your losers are your blown accounts, and your winners are your payouts, right? So you do it very fast. So with something like Top Step, for example, you would take 2 days to pass, right? You risk the full amount, you get 50% of your profit. And then that way, on your funded stage, you can get a payout within like a week, essentially, right? And then you just keep churning as fast as you can. You're going to blow about 50% of the accounts.
So churning the account, just so I've got it in there, the listeners can really understand it. So this is where you buy a low value account and risk, or like almost 50% of the available margin or whatever, not really margin, but the available drawdown, to then get a bigger, I suppose, can you give us maybe give us an example? Give us an example, like a monetary example.
I'll give you a concrete example of exactly what I did on Top Step when I decided to churn, right? I buy multiple accounts, right? So maybe say I'll buy 3, okay? And I know that I'm going to blow at least one of them for sure, right? I'm going to risk the full margin each day. So all I'm going to shoot for is, I have a $150K account. I'm looking at it right now, and I have $4,500 drawdown. I only need $4,500 profit, because the total profit is $9,000, right? So I need to do that 2 days in a row. Okay. So let's say I blow 2 of them, right? And that's only one ends up being passing, right? So you risk 45 to make 45, and then you do it again the next day. 2 of them get blown. You now have 1 funded. Once you're on the funded stage, it's a little bit different, because now it's real money, right? In essence, because you're withdrawing. It's the exact same as having a regular account, your own personal account. So you can lower your risk now. And so that's an optional thing. So what I do is I then shoot for $3,000 instead of a large amount of money. I shoot for $3,000. I kind of shoot for minimums that keep me in the game, and then I just I just slowly trickle money out, and then I should keep building more and more funded accounts.
Okay, right.
Yeah. And eventually, so Top Step model is a little bit different because you only can withdraw half. But if you're trading on, I know your sponsor's Blue Guardian or another prop firm or something like this, then what you do is with those CFD firms is you just get the minimum each week, and then you just keep withdrawing the minimum, right?
Right.
And that's the best for that strategy. Top Step's a bit different.
And so like if somebody took this approach and let's say they had $500, right, to invest, what would be their, like, after, let's say they went down the dumb money concepts route and they traded it for, let's say, 3 months, what would you expect them to make out of that or lose?
So you're talking about churning?
Yeah, churning and investing in a prop firm with a $500 starting account balance, or the starting balance that they've got. They got $500 to invest in a prop firm.
Okay. So this might be a confusing calculation, and it might be kind of weird for me to explain this and without actually writing it down. But there is a calculation you can do, and it's your expected amount of payouts, right? So you calculate what percentage you take to get funded and a payout, right? So let's say you have a 50% chance to get funded, right? And then from your funded stage, you have an 80% chance to get a payout because it's more likely that you just get a smaller amount, right? That's 40% chance to get a payout overall from each account, right? So out of 10 accounts, 4 of them are going to get payouts. And then how much do you get paid each time? Okay. How much you get paid each time? Let's say you get $2,000, right? So $2,000 times 0.4 is whatever that is, like $500, I think.
It's $800, I think. Yeah.
Yeah, some hundreds of dollars. And then what you do is you subtract the account cost.
Right.
And that's your expected return per order of the. So what you're doing is you're trading the prop firm. You're not trading the account anymore.
Hey folks, what a view behind me. I'm at Black Bull Markets headquarters here in Auckland, New Zealand. Speaking of views, you can get TradingView paid plans for free at Black Bull Markets, saving you up to $600 a year. That's right, get either the Essential, Plus or Premium plans absolutely free, and all you need to do is trade from one lot a month at Black Bull Markets. And you can also get a 100% deposit bonus for your first deposit up to $1,000. All you need to do is click the Trading Nut link in the description below.
So it's kind of a confusing way to do it. But that way, if you had $500, what you do is, if you're, I always just refer to Top Step because it's the bigger one, right? But if you got $500, you buy 5 accounts. 2 of them are going to pass, right? 2 of them are going to get a payout. Then your payout's going to be, a couple grand sort of thing, and then you're going to subtract the $500, so you're going to have made $1,500 or so,
cool.
right? Right in what, a month? Be a month, because 5 accounts, you would just churn them. You'd buy all 5, you'd go as fast as you can, and it would take you probably 2 weeks.
Yeah,
right?
And so you're sort of looking at, can you give an example of the lot size or the contract size you'd place on an account size to give you that one to one? It's kind of like a 1-to-1 because you're kind of risking 4.5 to get 4.5 if it's 4.5.
Now, I have to caveat this and say, your strategy needs to be profitable. Otherwise, you're just gambling, right? So you can't you have to do that calculation for yourself too, for whatever your pass rate actually is. Those are like my rough numbers. Like I have a roughly 50% pass rate and then a roughly 80% payout rate once I'm funded, right? So sorry, what was the question again?
So the question was. Damn it! I think I've forgotten the question.
The lot size.
Yeah, the lot size.
Contract size.
Yeah.
I wouldn't. So it completely depends on how long you're trading. I trade the NASDAQ on the open, so I would trade maybe 2 full contracts. 2. I think lot. I don't do a whole lot for CFD firms as much. I like futures a bit better, but two lots or so, right?
Okay.
You can. I guess if you're scalping, if you're going super low time frame, I trade maybe 2-3 trades a day, right? So,
and so you obviously, when you're placing these trades, just so we got a full picture here, you're going through. First trade will be on one account, the second trade will be on another, and then the third trade will be on yet another account.
Yeah, so I'm not copy trading. That would completely ruin all of this, right? You just keep buying more accounts, right? So what I actually have right now is I have on Top Step I have 3 accounts, and I just always have them going, and then I can just jump between. So one's currently funded, and I'm on my second payout now on that one, and then I'm got one that I blew, and then I've got a challenge. That I'm nearly like halfway or whatever, and I'm going a little bit slower just because I already have a funded one. I'm trying to demonstrate, but on live stream. But essentially, I could just go through that one and see if I can get a second funded and just keep churning and resetting, right?
And are the prop firms obviously happy with this kind of approach? I mean, have you ever had any issues with getting payouts?
I have never been denied a payout. I follow the rules. You would be wise to make sure that you follow their rules really closely. And with the CFD firms space, it might be a little bit different in terms of getting payouts. A lot of firms don't like Maven. They don't do we don't do an all or nothing trading. So if you can't just bet one massive trade and pass, right? So it has to be 2 days sort of thing. Some people have, minimum days, consistency rules, things like this, right? So it's pretty common practice. You just need to follow it, right?
Okay. And so what about we talked at the very start, you're going to tell us how to actually trade like a pro. So the truth about edge, risk, and market structure. I mean, do you want to explain that?
How to actually trade like a pro? Well, the reality is the issue I have with a lot of the trading world is that everyone tries to find a strategy, right? And this is my interpretation, is professional traders do not have a strategy, right? They have things that they know how the market works. They understand how the market works. And it's not like, okay, I see an FVG, I see the fair, I don't see all these different things and then try to analyze it. Okay. I don't come up with a picture. This is what's happening currently, right? It's going to go here. This is the trend. So all you really need to know is what direction is it going, right? And then you follow it. Okay. Any strategy is going to get completely obliterated by the algos. If there's a strategy that works, an algorithm is going to pick it up faster than you can, right? And it'll be completely destroyed by arbitrage, right? Hopefully that makes sense. In the same way that like a Bitcoin exchange in Japan, if it has a different price than the US one, that price difference is instantly going to be arbitraged, right? So if a strategy is working, there's a bot that fills all of those orders until it doesn't work anymore. Okay. Whereas what you can do is you can follow the trend, and because there's no strategy for following the trend, right? You enter when it's going in one direction, and that's literally all you do as a pro, right? As a pro is you determine what the trend is and what direction it's going, and then you just follow it and you get out when the trend's over, right? So my concept was dumb money concepts, right? And all I'm doing is watching trend continuation, essentially, right? So as levels keep continually getting broken, I'm getting confirmation that the trend is continuing. Once it fails to make a new high, right? Boom, the trend is now reversing in the other direction. And how do I know it's reversing in the other direction? It's because it can't go in the same, if it gets rejected, you go to a roadblock in the middle of a road, right? What do? Do you try to keep going down the same roadblock? No, you go back the other way, right? It's the same idea in the trend. The market it's not going to just keep trying to break the same high over and over. If it fails, it goes the other way and tests the level in the reverse direction. There's only 2 ways it can go: the next level up or the next level down, right?
Yeah. And it's that, folks. In fact, that is kind of trading in a nutshell, I believe. Out of all the interviews I've done, that is essentially trading in a nutshell and what the professionals do, which is probably the hardest thing for them to try and get across to anyone that they teach, is like the strategy comes with the gray areas of how to read the market and read what it's doing and work out what everyone else is doing. Has everyone else decided that the trend is over? Yes, they have. Okay, then it's either going to go into a range or it's going to go in reverse. And you've got to then determine that this is where they get good at determining, is it in a trend, is it in a range, or is it trying to reverse?
Well, here's my beef with that, man, because there's no such thing as a range. I'll argue with that exactly. The price can't go sideways. Sure, it can go like boop, 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 but all that is retesting levels to the upper lower, right? And if it keeps failing, you can I can show you this on the chart later exactly, because it's flawless. You will know for sure if it's going up or down based off of how it reacts to the levels, right?
Yeah, I mean, like in a way, you're right, because I mean, a range is really just a trend on a smaller time frame, right? So
exactly.
it is still you could call it a range on 1 hour, on a 1 minute. You've got 15 trends in there that you could be trading. So I do tend to agree.
I get what you mean, but I want to argue with you.
Well, I mean, the way I see it, there are areas where price will trade within, right, where it won't clearly go in a direction. And it could be a flag pattern, it could be a pennant, a triangle, something like that, where it's kind of stuck for the time being, eventually going on its way to either reverse or carry on with the trend.
Yeah, well, what that is continually failing to make new highs and failing to make new lows. So there's no trend continuation. So it's not a range; it's failing to have a trend.
Yeah, which is another way to put it, I suppose. And it depends on. I mean, if you're just looking for trading the trend, I think I completely agree with you on the fact that the pro traders out there are the ones that can identify a trend has started and then capitalize on that trend when it's at the start and then throughout the trend, i.e. not be afraid to get in when the trend is underway and understand that this trend has got more room to move, and you're not getting in at the highs, you're getting in at another point higher up.
Hey folks, just jumping in here quickly. Now, if you're looking to trade dynamically, you want to learn from my own trading mentor, JJ, then what you need to do is click the link in the description, register your interest, because we're going to be launching this Dynamic Traders Club very soon and you don't want to miss out. All right, let's dive back in.
So on the flip side, we're just talking about how the pros do it and how the retail, the dummies kind of do it, right? Is they're looking for, these terms, right? The FVG, they're looking for the sweep and reclaim. They're looking for these patterns. And, there's the cup and handle, all these crazy things that just because that appears, it makes no sense that image of the chart is going to make you money. It doesn't make any sense because it's not a trend. It's just something that had happened, right? And then out of probability, people assume that, okay, I'm going to make money out of it. But no, the algorithms are going to pick it up. If that pattern does exist to make money, it's going to already be filled. You're going to lose out on it, right?
Yeah, look, I mean, I so the more I trade, the more I'm in the mindset of, look, there is no strategy. It's not intuition. It's one strategy, but it's multitudes of strategies. I mean, you're going to see stuff all the time and you just go, well, I mean, it's quite hard to explain. My mentor, JJ, who's been on the show before, he's taught me about 25 different strategies, right? And I see them happen all the time. And it's just deciding, okay, well, at what point do I want to use which strategy?
It's confusing.
Because I know the trend is in play, or I know it's starting a trend's about to start, or I feel like a trend's about to start. So therefore, I could pick this entry, that entry, this entry, depending on the time frame. It doesn't matter. These things happen on all the time frames all the time, and it's just repeatable. And you can either get in at the very start, halfway up, if you think it's got room to move, even higher up in the trend, if you want. The problem now where you get to is the confidence, right? I think confidence is a big thing, and I'm interested in your thoughts on it around whether you think that's a big thing in terms of having confidence in your approach and as a trader, and or I suppose confidence in the strategy and that kind of thing, just around, I've entered the trade And I know that with confidence, this should work, or this should work more often than not.
Yeah, that's I mean, I'm sure it's a pretty obvious answer. Like you need experience and you need data to support that. And then if you're not confident in a trade, like what the thing is, this is why I say like you can have a really stupid, easy strategy like dumb money concepts, right? Where it's just a simple little dumb thing, right? Because if you're not sure and you're not confident, then you need to be able to recognize that, say, hey, I don't know what the hell's going on. So now I'm gambling. So if I walk up to the chart in the morning and I say, hey, I don't know where it's going to go, why the hell am I trading, right? The question you should be asking yourself is there a trade, not which trade do I take, right? And that's the what trading is. What the pros do is they recognize their emotions. They don't recognize the chart. They say, hey, I don't know what's going on. I'm going to get out. Hey, this looks like it's going against me. I've gotten the confirmation that I need. I have to get out. So that's, again, the reason I don't use stop loss, because a stop loss, this is a good clip for you, I'm sure. A stop loss is only for people who are not able to manage their emotions properly. Right? What do I mean by that? It's because you are not able, you need some divine intervention to come into your trade to take you out because you're not able to do it yourself. You're too weak to be able to leave a trade because you can't accept that you're wrong, right? You can't accept that something has gone against you and you have to leave. So you need somebody else to come over and pull you away from the chair so you stop, right? And that's the difference between a profitable trader and a non-profitable trader is one who actually has control.
Yeah, look, that's a very good way to look at it. And the stop loss, I mean, literally, you could do a whole podcast on the stop loss because I think there's a lot to it. I mean, I've over the years kind of realized that a lot of the profitable traders that I know, in fact, almost every single one that has got to the point of being consistently profitable, I'd call them like they're up there to the point where I've gone to black bull events and met traders who they've obviously thought these guys are good enough to invite and fly them across the world to an event. When I speak to them, none of them have stop losses. And obviously the brokers thought, well, these guys are good enough to fly out and do whatever they need to do with them, like just, meet them and all this sort of stuff. But they don't have a stop loss. None of them, like 100% of them. And in fact, there was one guy that had paid, I don't know if he's going to be listening to this, but he paid, I think it was like $25,000 to go on a 1 week retreat. But he also had to bring $100,000 to that retreat and invest it that week with a broker and then trade it that week, right? So 25 grand to go there, plus flights, accommodation, and 100 grand account. And he didn't know anything about trading. The guy said, right, here's what you're going to do. You're not going to use a stop loss because having a stop loss is admitting that you'll lose the trade. So it was kind of like that. It was a bit like what you're saying, admitting that the trade could lose.
Well, it's that's different.
It's slightly different, but it's kind of like his idea was it's like admitting to yourself that the trade could lose, which indirectly brings on all these other emotions. Anyway, the guy walked away, I think, with $80,000 at the end of the week. I mean, albeit risking a whole lot, and he actually came away depressed for 2 months because he did make 160,000 at one point and lost 80K in the last day. But that's a different story.
So I really need to press this and say, if you're not using a stop loss, you're like, I'm not saying risk $100,000 account. You know what I mean? You have to know when it's time to get out. Okay. And sometimes what I do is I put a stop loss like twice as far as what I would expect to want to be out at, right? Just in case. So I will throw one on there somewhere so I don't blow in $100,000, right? But if you're trading like that and you keep adding to a trade or something like this, like what I generally do is I have a zone where I'm going to add in that zone, right? Because I don't know which level that the market's going to take. I add a couple times. And then if it closes behind the area that I want it to close on, then I get out. And what's great about this is a lot of times I'll actually pick up an order where my stop zone would be as well. So that trade is zero risk, essentially, right? Because it'll pick it up, and then that'll be like my last 2 or 3 orders all in the same area. That one will, if it gets hit, right, it could wick up, perfect trade then. Or if it closes down here, I close for break even because I've determined that that's wrong.
Yeah.
Okay, but I do want to pick up these hunts that people call them, right?
Okay. Well, we'll have to dive in a chart and have a look at all this stuff because I think people will have a different view on smart money concepts and learn about dumb money concepts. So, Chris, thanks for coming back on the show, mate. It's been awesome having you on, having this chat. Yeah. Now, what's the best way for folks to find out more about you?
Probably X. I think it's Hunter _Maven on X, something like that now, or on YouTube, Hunter Maven. Yeah. Trader.hunter on Instagram or TikTok.
All right, folks. Well, what we'll do is hook up a links to that under the show notes here. Whilst you're there, click subscribe, like, and that notifications bell, and we'll see you in the next video. We're going to jump onto a price chart now and actually see what this guy can do. So don't miss that one.